For the last few years, let's be honest, the entire financial world has seemed to revolve around one single massive force, NVIDIA. But as we look ahead to 2026, you can feel the ground starting to shift. The era of that single monopoly, well, it's ending. And a new, high-stakes conflict is about to begin. This is the story of the coming AI chip war. To put this into perspective, at its peak, NVIDIA's market cap soared past an almost mind-boggling $5 trillion. Now, that kind of valuation isn't just about silicon. It was built on the company's absolute total dominance of the GPU market, the very hardware that's powering this whole AI revolution. For now, they are the undisputed king of the hill.
But this right here is the crucial point. That era is ending. The AI market is growing up, it's maturing, and the rules of the game are being completely rewritten. And this isn't just about a little competition. It's about a fundamental change in the very nature of AI computing itself. And that change is creating a brand new war for technological control.
And in this war, there are 5 key combatants. You've got the incumbent, NVIDIA, and it's facing a challenge from literally all sides, from its historic rivals like AMD and Intel, and even from its own biggest customers, Google and Amazon. What's at stake here is nothing less than control over the next decade of technology and, of course, the future of the stock market.
So what's the prize they're all fighting for? Well, it's monumental. By 2026, the AI data center industry is projected to be worth over $67 billion. For these 5 giants, winning this war means capturing a massive piece of that pie and delivering returns that are going to make the rest of the market look flat.
So, what is this new battlefield? What's actually changed? It's all defined by a critical shift in where the money is going. The market is moving away from that initial, incredibly costly process of building AI models and moving toward the continuous, massive-scale process of actually using them in the real world.
Okay, let's be super clear on this. Think of it like this. AI training is the heavy lift. It's like building the skyscraper. It's complex, it's expensive, and you only do it once in a while. But AI inference, that's having millions of people living and working in that skyscraper, 24/7. That's where the models are put to work, making decisions, serving you search results, and processing transactions. This is what drives the massive, ongoing operational costs, and it's where the financial center of gravity is now shifting.
And look, the hard data absolutely confirms this shift. The numbers don't lie. Investment in inference servers is projected to grow at a staggering 42% compound annual rate. That completely blows away the 24% for training servers. The market is screaming, loud and clear. Inference is the future, and it's by far the more lucrative prize.
And here's the great irony in this whole story. NVIDIA's own incredible success is what created this conflict. By capturing something like 95% of the market, its high prices and supply chain headaches gave its biggest customers, the cloud giants, basically no other choice. They were forced to invest billions in designing their own custom chips just to control their costs. NVIDIA's success literally forced its best customers to become its fiercest competitors.
So, let's break down the battle lines. Each of these 5 players has a unique and, frankly, aggressive strategy to win this war. And understanding them is absolutely key to seeing where this market is headed.
All right, first up, NVIDIA. They're defending their throne with what I call a vertical fortress. For 2026, it is all about their next-gen Vera Rubin architecture, built on TSMC's cutting-edge 3-nanometer process. But their true weapon, their impenetrable moat, is and always has been the CUDA software stack. By integrating GPUs, CPUs, networking, all of it optimized through CUDA, they make it an absolute pain for customers to leave. The switching costs are just incredibly high, locking customers into their ecosystem and protecting that high-margin training business.
Next, Google. They're fighting an internal revolution. Remember, they pioneered custom silicon with their tensor processing units, their TPUs. And the latest version, TPU v7, is an absolute inference monster. Now, they have massive built-in demand from their own cloud and AI services, but the real threat here, the potential game changer, is if they become a merchant supplier, selling these hyper-efficient chips to NVIDIA's other customers. That could change everything.
When you've got Amazon through AWS, and they're launching an efficiency offensive. Their custom Inferentia and Trainium chips are designed to do one thing and do it exceptionally well: drive down costs. By offering 30 to 40% better price performance than traditional GPUs, they are waging a war on operating expenses. They're aiming to lure away those high-volume customers who are just getting tired of paying NVIDIA's premium prices.
AMD is executing a really brilliant counterplay. They are positioning themselves as the only viable second-source alternative for big companies that are desperate to avoid total NVIDIA lock-in. I mean, nobody wants to be beholden to one supplier, right? Their whole strategy centers on the MI400 series, integrated into a full rack-scale solution called Helios. It's a direct shot at NVIDIA's system-level dominance. And as their ROCm open-source software matures, they become a more dangerous competitor every single quarter.
And finally, there's Intel, and their strategy is a high-stakes, all-or-nothing bet. They've pivoted to a rack-scale solution they call Jaguar Shores, but their entire future, everything, hinges on the success of Intel Foundry services and executing on their 18A process node. If they succeed, they could become the foundational supplier for the entire industry. But if they fail, well, the consequences will be severe. It is a truly binary outcome for them.
But, this war isn't just being fought with silicon and software. There are two powerful macro forces out there that are fundamentally changing the rules of engagement for every single one of these companies.
The first one is what I call the energy tax. Global data center power demand is set to surge by 17% by 2026. That is going to strain electrical grids to their absolute limits. And what this means is that performance per watt is no longer some talking point on a spec sheet, it's a critical competitive metric. Inefficient chips now carry a perpetual financial penalty. And this is exactly where the hyper-efficient custom chips from Google and Amazon really shine.
The second major force is geopolitical fragmentation. US-China export controls and the immense risk that comes with the world's heavy reliance on Taiwan, these things are forcing a global shift away from pure efficiency and towards supply chain resilience. And this massively elevates the strategic importance of domestic manufacturing, giving Intel's US-based foundry a powerful government-backed advantage that you just cannot ignore. So, with all the strategies and these macro forces laid out, we finally arrive at the bottom line. How does all of this maneuvering actually translate into shareholder returns? Let's put it all together and take a look at the financial forecast for 2026. Because at the end of the day, that's the question that really matters to any investor, right? How does this massive architectural war translate directly to your wallet?
Okay, let's break down the numbers right where strategy meets the stock ticker. The S&P 500 is our baseline here, with a projected upside of around 13%. Now, for NVIDIA, the thesis is a continued ramp of its Rubin architecture, pushing the stock towards $300 or more. But notice that high PE multiplier risk. That valuation is already pricing in a ton of success. For Alphabet and Amazon, the upside is more moderate, but so is the valuation risk, and it's driven by their internal silicon efficiency. Now, AMD is the wild card. If they can capture even just 10% of the market, their stock could see a massive jump, maybe towards $380. But that high risk reflects the huge challenge of unseating an incumbent. And then, Intel. The price targets are just all over the map, from $18 to $48. And that perfectly reflects the extreme binary risk we talked about. If 18A works, it's a home run. If not, it's a severe strikeout. So this brings us to the final verdict. To make an informed decision, you really need a clear framework that weighs the potential rewards against the very real risks for each of these combatants.
This matrix really summarizes the entire conflict. NVIDIA offers a higher reward, but it comes with moderate risk tied to that high valuation and its geopolitical exposure. Alphabet and Amazon, they represent a lower risk play on the cloud, offering more moderate, stable returns. AMD is the high-risk, extreme reward bet on becoming that viable second source. And Intel? Well, Intel remains the ultimate gamble, extreme reward potential, but facing extreme execution risk. The path to victory is totally different for each one.
So, as we look ahead to 2026, the question for every single investor is this: where do you place your bet? Do you invest in the continued dominance of high-margin AI training led by NVIDIA? Or do you bet on the massive, efficient world of AI consumption, which is controlled by Google and Amazon? Or do you go for the foundational, high-stakes future of domestic supply, championed by Intel? The war is on, and the market is waiting for your answer.